Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Okay, 2 minutes to go from the end of the trading day before the closing bell rings. I'm Scarlet Fu here with Katie Greifeld. We are counting you down to the closing bell, and here to help us take you beyond the bell with a global simulcast, Jess Menton and Doug Krizner in our radio studio, bringing together Bloomberg Television, Bloomberg Radio, and our YouTube audiences worldwide as we try to track the most crucial moments of the trading day. And Jess, I thought it was interesting when the headline crossed that the FDIC might start charging the big banks higher fees or pass on some of the costs to plug the $23 billion hole. And we saw bank stocks give up a little bit of their advance and then move higher once again.
Exactly. And when we're talking about this, also something that stood out to me, if you look at the VIX, it's a little above 19 right now. So when you're thinking about this, especially still being below 20, what that means as far as where is the volatility, right? When you're still seeing that happen. But as far as what the dynamic is with that, it's kind of still a head scratcher for some traders, right, Doug?
Yeah, most certainly. And one of the things I think is particularly interesting today, even though we've got this appetite for risk, we're not seeing a lot of movement in the bond market today. There has been so much volatility at the short end of the yield curve, but the 2-year right now is only up about a basis point. That, for me, is a little confusing. And I mentioned last hour that we are seeing a great deal of weakness in the yen. That's also a very interesting dynamic.
I want to stick on the bond market because it is amazing. It's beautiful to have the 2-year Treasury yield only up 1 basis point. I mean, a sort of return to normalcy, how this market is supposed to function after really just brutal couple of weeks.
Yeah, very much so.
No double-digit moves for the 2-year bond yield. Okay, let's take a look at where we're settling for the day. We're looking at almost 1% gain for the Dow Jones Industrial Average, up 319 points. The S&P gaining 1.4%, just off session highs. The NASDAQ, the star performer here, adding 1.8%. As Bob Dahl was just telling us, it's rare to see both banks and tech gain, but we have it today.
Also, looking more broadly at the breadth in the market, more than 90% of the stocks in the S&P 500 higher. And then if you're looking at the decliners, about 8% or only about 42 companies lower, Katie.
And if we take a look at the industry groups, I have a bunch of green bars behind me, a big broad rally today. You can see up top, it's semis, that sector group up about 2.8%. A lot of that coming from Micron. Remember, they reported results after the bell yesterday, gave that really strong outlook that boosted shares and the industry group as a whole. You go down the list, there's not much to pick at. It's all green, but at the bottom, it's been the loser all day, sort of these healthcare names. You have pharma there, you have healthcare equipment and services. Definitely the underperformer on this day, Jess.
Also, I have to point out some of the companies we were actually talking about after the closing bell yesterday, ladies. Looking at Lululemon, this surge almost up about 13%. It was its best day since March of 2019. So that does come off the back of that better than expected on the earnings front. And then I have to point out also what's going on with Paychex. That's up about 6%. One of the top gainers in the NASDAQ 100. And of course, also pointing out what's happening with Micron Technology. That's up about 7% as well. We talked about their earnings after the bell yesterday. If you're looking on the inventories front, still a lot of weakness on there. And we were debating what that would mean as far as what it could potentially mean for the stock gains today. But when you're looking at that, apparently not as bad as feared is what we've heard from a lot of this, and especially just broadly with chip makers, those still rallying, especially when you think of the gangbuster gains they have so far this quarter.
It's difficult to find a stock that is down on a day like today, but I did. I found
so
Raw Stores finishing off session lows. Looked like we're going to gap down about 0.7%. UBS today cutting Raw Stores to a sell, a new price target here of 77. It's at 102.47 right now. So that would imply something greater than a 20% decrease from where we were trading now. I think for the firm, UBS right now, they've become a little bearish, increasingly so on some of these soft line companies. Yesterday, we had that consumer sentiment figure, the consumer confidence number that I think shocked a lot of people. But now the conversation around recession, the inevitability of that, I think some people are second guessing the strength of the American consumer. Although Danny Blanchflower from over at Dartmouth talks about walkabout economics. Today, coming through Midtown Manhattan, you would not know that we're anywhere close to a recession.
but everyone was wearing Lululemon leggings, probably.
Probably. I didn't take a close look.
Let's take a trip to the bond market where boring is beautiful. You have the 2-year Treasury yield up just 1 basis point and then nothing along the rest of the curve. From 10 years to 30 years, not even a basis point of moves in either direction. And I mean, this comes after some pretty incredible repricing when it comes to the Fed's rate path. I will note that right now, if you look, you have still more than 50 basis points worth of cuts priced into this year alone. But Scarlett, that was 100 basis points of cuts sometime last week.
Yeah, BlackRock also saying that bet is wrong to count on interest rate cuts later this year. That's not going to be the playbook that the central banks use this time around. Looking ahead, Jess, I'm thinking of the data that's going to come out in the days to come. We get core PCE for the fourth quarter. That's a final read, and it's very backwards looking, but that might certainly contribute to the debate over where inflation is headed and how the Fed proceeds. And then on Friday, of course, we get PCE deflator for the month of February, which is much more current and what everyone's fixated on.
Well, Doug and I actually were just speaking with Bill Smead. So he's the CIO of Smead Capital Management. So we got into the inflation discussion with him as well. But something he also brought up is he's adding exposure to home builders like Lennar. If you look at the XHB, the ETF tracking home builders in the S&P 500, it's up about 10% this year. So you are seeing other corners, and especially when you're bringing up data, Scarlett. We got the pending home sales data as well earlier today. You're seeing certain surprises to the upside there. But that's been an interesting dynamic as well as what's happening on the housing front too.
Yeah, the housing market continues to be interesting. And it's interesting, of course, that is one of the most interest rate sensitive corners of the economy. But I also want to talk about data that we don't normally talk about, but which is very much in focus in this cycle. Of course, we're talking about the Fed's balance sheet data, which I believe comes out tomorrow. And then we have the deposit data that comes out on Friday, that H8 release, when we're tracking the flow of deposits potentially from small to big. This is now top tier data, Doug.
Or money that is leaving the banking system entirely and going into kind of money market funds. I think the last figure was something greater than $285 billion, so more than $250 billion. That is significant. But the money supply, I think, is going to be very interesting to track. I think if you look at what's been happening to the balance sheet now, given some of the emergency lending facilities that the Fed has had to put in place, it's a little bit bloated. The question now is whether they can resume rolling off at the current pace, which I think is around $95 billion a month, or whether that has to be moderated.
It all gets folded into what was the phrase that Jay Powell used, the totality of the data. Remember that? That was like 3 weeks ago.
It's beautiful.
Yeah.
I do think it's really interesting, though, Doug, to that point on the balance sheet getting bigger. I know that some people looked at that and said, look, QT, it's over. We're back to easing. But I think this is one of the situations where even though the number is going higher, intent really matters here. That's not necessarily a policy signal, as I've seen at least some people on Twitter make it out to be.
Well, it's going to be Fed funds, right? That's going to be the key going forward in terms of where the economy may wind up, and the degree to which, the other part of the story is the degree to which some of these banks will maybe contract a lot of the lending that they've been doing up until this point, and whether that's going to have a knock-on effect in really slowing the economy. So maybe, I think Powell even said it in his last press conference, that type of contraction, that level of contraction will essentially mean maybe another 25, 50 basis points worth of tightening.
Definitely. And I have to bring up the VIX once again. I was actually speaking with Chris Murphy over at Susquehanna, and he was talking about anytime we've seen its level, or even especially the VVIX down so much, when it's below 20, you do see traders come back in and buy some of those options. So I'm curious to see kind of now that we're below that threshold again, what that could potentially mean for tomorrow with the VIX.
Have we gotten a satisfactory answer yet, Katie, on why the VIX is so muted compared to the volatility measures for FX and bonds?
I feel like we haven't. I heard an interesting speculation it was Charlie McElligott of Nomura. He was on the Odd Lots podcast. This was from earlier in the month. He drew a direct line between basically what we're seeing in money market funds. So many people are in cash right now, and what we're seeing in the VIX. He made the point that basically being in cash is an at-the-money put. So maybe that's why you're not seeing volatility spike how you might expect it to, because people aren't necessarily in the market right now.
It's having a distorting effect.
Yeah.
So what would precipitate people to take risk then? Where would what would be the event that triggers money moving from those money market funds into risk assets in the event rate cut? I think that's likely.
Yeah, but rate cut to get a rate cut, things have to get really bad. So path to
cuts
rate
both ways.
pretty ugly. Yeah.
The other thing that I want to point out before we wrap up here is the weakness that we're seeing in the Japanese yen. And I know an hour ago I made a bit of this because I think it's a significant move. The fiscal year for Japan ends on the 31st. So some corporate treasurers in Japan are unwinding hedges today. But I also think it's a reflection of maybe what we may be looking at in terms of a policy shift on the part of the Bank of Japan. We've got a new governor starting next month. And already the deputy governor making noise that the next action that they could take may surprise the market.
All right, guys, it's been fun. That does it for Beyond the Bell. It's been fun chatting with y'all. And so now our cross-platform coverage of market close on Bloomberg Television, Radio, and YouTube is concluding. And a reminder that Bloomberg Business Week is now on Bloomberg Originals. We'll be back tomorrow at the same time, same place.